Well, of course, the other major story today, this market drubbing, it's going to grab all the headlines. But one of the things you're not going to read about, perhaps, is the evidence that this economy has begun to roar. Wages surging, the manufacturing renaissance just getting stronger, construction spending at record highs, and the job market very powerful this late into a recovery. The big question, of course, is can it all last? I want to ask two of our smartest people that I know in business, Lindsey Piegza, chief economist at Stifel, Nicolaus, and Dennis Gartman, publisher and editor of the Gartman Letter. Dennis, since it's your first time on Making Money, I'll start with you. Strong jobs numbers, the economic data, it's firing on all cylinders, and it feels like this hasn't happened in a long time. So everyone's talking about the Fed snuffing this thing out, and it feels like if you talk about the ultimate green shoots, it feels like we're in the midst of that now.
Well, we are. I mean, this is a very strong economy, and we really shouldn't be surprised by the fact that the stock market had a break. It had become ridiculously, almost egregiously overbought. And late in the economic upturn, such as the one that we have right now, the demand for plant, equipment, and labor becomes very strong, and money moves away from the capital markets. It moves out of equities and moves into plant and equipment and labor. So we shouldn't be surprised by what happened. Maybe the fact that we were down 700 is a bit surprising, sure. And it may have farther to go on Monday or Tuesday or Wednesday of next week. We shouldn't be surprised by a 5 to 7% correction. But really, it is not unusual to see economic activity get strong and stock markets get weak just because capital moves away from the equities market and moves to plant and equipment and labor. It's a very normal circumstance.
Lindsey, are you surprised at how strong and resilient the economy has been? And what do you think the Fed's going to do about it?
Well, I don't think the economy is on quite as strong footing as you're selling it. I think we might be overselling our hand a little bit. I think it's on steady footing, and I think a good portion of the sell-off in the market is reflecting that steadiness and a concern that if the Fed gets overly aggressive, they could easily undermine some of the recent momentum that we have seen, particularly in the aftermath of tax reform. But remember, we're still talking about just a 2-ish% economy. And this morning's employment report, yes, it was positive. We're putting Americans back to work on a month-to-month basis. But we also saw the momentum in hiring continue to decline, with the 3-month average now under 200,000.
Well, let me ask you then, Lindsey, because the Atlanta Fed has gone to 5.4%. I know it's early. Listen, and we can see the fourth quarter revised closer to 3%. That's a pretty strong string of economic growth, at least GDP growth, no?
Well, the Atlanta Fed also was calling for above 3.5% for the fourth quarter, and we came in at 2.6%. So I don't necessarily know how much credence I would put on early estimates coming out of the Atlanta Fed. Not to say they're not a great forecaster, but there are some question marks around that expectation. But still, I do think the economy is going to post positive growth going forward. But the idea that tax reform alone, plus confidence, is going to buoy this economy above 3% consistently remains really unfounded if we look at some of the numbers. Even fourth quarter, 2.6% coming down from 3% is a step in the wrong direction.
Although, Dennis, if you look deep into the numbers, if you take out the trade component, the other parts that reflect our economy, for instance, consumer spending, consumer confidence in of itself, it feels and looks like even before these tax cuts that they were on the move.
Oh, there's no question. The consumers have been far more ebullient than they had been in a long period of time. A little disconcerting that they've actually curtailed their savings rates, so that tells you that they're actually expectant of stronger economic environs and willing to go out and spend money. Perhaps there's some disconcertion there, but this economy, I love what Brian Westbury calls it. It is a plow horse economy. It's not a racehorse, and it's probably not going to be expanding at 3.5 or 4%. I think it's going to be much more, as Lindsey said, much more amenable to 2.5 to 3, maybe 3.5% going forward.
All right.
Will the Fed tighten monetary policy? Not a question. The only question is, will they do it 3 times this year or 4? And my bet is they actually move to four times.
Yeah, and listen, I think they'll do it 4, but I think we can handle it. There's nothing wrong with the Clydesdale, even if I think right now we might be in thoroughbred mode. Lindsey, great seeing you. Dennis, welcome to the show. See you guys soon.